Water. It's one of those things that feels so simple. It falls from the sky, covers the planet, you turn on the tap, and there it is.
So simple you almost think, how could you build a business around it? The knee-jerk reaction is to think, utility. Slow, maybe a little boring.
Exactly. Safe, but boring. But that's not the story we're seeing today.
No, not at all. Because the moment you have to move that water or clean it or, just enjoy it in a pool, it stops being a commodity.
And it becomes a technology play. Which brings us right to Pentair, ticker PNR. We're looking at their Q4 and full year 2025 earnings report, which just dropped this morning, Tuesday, February 3rd, 2026. And this is not the story of a sleepy utility.
It's the story of a company that is, I think, engineering its own luck. They're not just riding the waves of the market. They're building their own engine.
And before we get into the weeds on tariffs or copper prices, we have to just mention the big headline. They are on the verge of becoming a dividend king.
50 consecutive years of dividend increases. It's knocking right on the door.
That's incredibly rare. It signals a kind of stability you just don't see anymore.
You really don't.
So here's the mission for this deep dive. I don't just want to celebrate that streak. I want to understand how they're keeping it alive in this economy.
Right. It's not exactly smooth sailing out there.
Not at all. We've got inflation, tariffs, a housing market that's weird.
Weird is a good word for it.
So how does a company like Pentair navigate all of that and still post record numbers? That's what we need to unpack.
It comes down to this really interesting mix of aggressive internal discipline and what I'd call a very pragmatic view of the world.
Pragmatic pessimism. I like that. So let's start with the big numbers, the scoreboard for Q4.
Okay, so Q4 sales hit just over $1 billion. 1.021 billion to be exact. That's up 5%.
5% top line. Okay.
But the real story, and this is where it gets interesting, is the bottom line. Adjusted EPS, earnings per share, came in at $1.18, up 9%.
Which was a beat, right? Beat the consensus.
It was a solid beat. And then you zoom out to the full year, 2025, sales hit $4.2 billion, so up about 2%.
Okay, 2%. That's basically keeping up with inflation, more or less.
Barely. But look at the earnings. Adjusted EPS for the full year was a record $4.92. That's up 14%.
Whoa, okay, stop right there. That's the first thing that makes you go, wait a minute.
Right.
Sales are almost flat, but profit is up 14%. How are they doing that? That's a huge gap to bridge.
That is the whole story in a nutshell. It's called margin expansion. And this report, believe it or not, marks their 15th consecutive quarter of doing it.
15 quarters. That's almost 4 years straight.
Think about what's happened in the last 4 years. I mean, the supply chain chaos, inflation, interest rates going vertical. And through all of it, they found a way to make more money on every dollar they sell.
So how? Is it just, are they just jacking up prices on pool pumps?
Price is definitely part of it, and they have the brand power to do that. But you don't get 15 straight quarters just from price. You'd alienate your customers.
Sure.
No, this comes from changing the guts of the company. Making things cheaper, running factories smarter, cutting waste. They are just becoming a leaner operation.
Which I assume leads to a lot of cash.
An enormous pile of cash. Record free cash flow for the year, $748 million.
And for anyone listening, let's just quickly define that. Free cash flow isn't just revenue, right?
Not at all. It's the hard cash left over after you pay all the bills and reinvest in the business, fix the machines. It's the money you can actually use for other things.
And they are using it. They bought back, what, 225 million in shares last year?
They did,
right.
Which boosts the earnings per share number even more. Fewer shares, bigger slice of the pie for everyone else. Plus, it funds that dividend.
It's a fortress balance sheet. Okay, so the financials are solid. Let's talk about the actual stuff they sell. And we have to start with the sexy business.
The pools.
The pools. The CEO, John Stash, literally called the best business Pentair has ever had.
It's the crown jewel. And on the surface, it looks fantastic. Pool sales jumped 11% in Q4.
11%. That sounds like a boom.
It does, but you have to look under the hood. A lot of that was price increases, not just selling more stuff.
Okay. Passing on costs.
Right. And the other key indicator here is something called early buy season.
Explain that.
It's when the distributors, the people who sell to pool builders, stock up for the summer. It's sort of a confidence meter for the whole industry.
What does the meter say?
It says stable, Orders were in line with expectations.
Not a boom, but not a bust either.
Exactly. Nobody's panicking. And that brings us to their guidance for 2026, which is where I think things get really fascinating.
This is what confused me. After all this, they're guiding for flat volume in pools. Zero growth.
Zero volume growth. That's the plan.
Why would they do that? I mean, everyone is talking about pent-up demand in housing. Are they just sandbagging?
It's that pragmatic pessimism we talked about. Think like a CEO. If you plan for a boom and it doesn't happen,
You get crushed. Too much inventory, too many staff.
exactly. So instead, you plan for the status quo. They are explicitly saying, we are not betting on a residential recovery.
It's the no recovery plan.
It is. They've built their entire cost structure to hit their profit targets, even if not a single new pool gets built.
Which is a brilliant position to be in.
It's a total win-win. If the market stays flat, they look smart. If the market actually does recover later this year,
It's all pure upside, all gravy.
all gravy. They capture all of it because their costs are already covered. And that same kind of discipline is behind this big restructuring they announced.
Right, the strategic realignment. I usually roll my eyes at that phrase.
Me too. It's often code for layoffs, but this one makes a ton of sense. They're moving their residential flow business into their water solutions segment.
So pumps and filtration are coming together. Why does that matter?
It matters because of the person who buys the products.
The homeowner.
No, the guy in the van, the plumber, the well driller.
Ah, okay.
The same pro who installs the pump to get water out of your well is the one who installs the filter to make it drinkable.
Right, that makes perfect sense.
But historically, Pentair had them in different divisions, different sales teams, maybe different supply chains. It was inefficient.
So they're just aligning the business to match the customer.
Exactly. They're creating this $1 billion water quality management unit that basically owns the utility room, from the pipe in to the tap out.
And looking at the numbers, it seems like a needed move. Flow was doing well, up 9%.
But Water Solutions was down 10%. Now, some of that was a divestiture, but the residential side needed a shot in the arm. Marrying it to the strong pump business should help.
Okay, so that's the internal strategy. Let's talk about the external threats. They were pretty blunt in the report about the macro headwinds.
Very blunt. Two words kept coming up: tariffs and inflation.
Let's take tariffs first. $70 million impact in 2025. That's a huge number.
It's a massive hit to the bottom line. And they're expecting another $30 million incremental hit in 2026, mostly in the first quarter.
And then there's inflation. They specifically called out metal inflation.
Copper.
Of course, can't make a motor without it.
And if copper prices are running hot, your costs go up. Period.
So wait a minute. Tariffs are up, copper is up.
Mm-hmm.
How are they still expanding margins? This is the central question, isn't it?
It is. And the answer is what they call the Pentair business system. It's their playbook. And it has two main weapons.
Weapon number one.
Pricing power. They're a premium brand. The pool installer trusts them. So when costs go up, they can pass along a 2 or 3% price increase.
And the installer just pays it because the alternative is a cheap pump that fails.
Exactly. But you can't just do that. The second weapon is internal. They call it transformation savings.
And they're targeting $70 million in savings for 2026.
Which, you'll notice, almost perfectly offsets the tariff hit from 2025.
They're neutralizing the threat. How?
This is where that 80-20 rule comes in.
Okay, I've heard this a million times, the Pareto principle. But what does it look like in practice?
It's not just a slogan for them. They go through every single product they make, every customer they have, and they find that a huge amount of their costs and complexity,
The headaches?
all the headaches come from, say, the bottom 20% of customers who order weird, low-volume stuff.
And those sales probably aren't even that profitable.
They often lose money. So under 80-20, you make a hard decision. You fire that customer or you stop making that product. You focus all your energy on the top 20% that makes you all your money.
So when they guide to flat volume, part of that is them choosing to sell less of the junk.
Precisely. They are trading unprofitable revenue for higher margins, and it is clearly working.
Okay, let's pivot from the cost-cutting to the cool stuff, the innovation. You can't save your way to growth forever.
Right. And they highlighted a few things. First, PFAS filtration.
The forever chemicals. This is everywhere in the news.
It is. And regulators are cracking down. So Pentair's Everpure brand, which makes filters, is now certified to remove PFAS.
That's moving from a nice-to-have luxury filter to a must-have safety device.
That's a huge tailwind. Then there's an ice machine.
An ice machine.
Yeah, the Manitowoc Ice NEO. It's for restaurants and bars, and they won awards for it because they built the water filter into the machine and used eco-friendly refrigerants.
So it's easier to install and maintain for the restaurant owner.
Solves a real-world problem, and the last one was, well, a bit less glamorous.
Let me guess. Something to do with wastewater.
You got it. The eccentric impeller. It's for sewage pumps. The big problem is they get clogged.
I can imagine.
This new design prevents clogging and uses less energy. So for a city or a factory, it's a no-brainer. Less maintenance, lower electricity bill.
That sells itself. Okay, so you put all this together, the pragmatic guide, the cost-cutting, the new tech. What's the final forecast for 2026?
The official guidance is for adjusted EPS between $5.25 and $5.40.
Which is up,
Yeah.
what, 7 to 10% over last year?
Correct. On sales growth of just 3 to 4%.
There it is again, that gap. Sales up 3, earnings up 10. The efficiency engine is just humming.
It is. And they're doing it all while the CFO, Bob Fishman, is retiring.
He definitely owned it.
He did. The new guy, Nick Brizzies, is an internal promotion, knows the playbook, so the message was very much steady as she goes.
Which is what investors want to hear. No drama.
Especially in the industrial water world. Boring is beautiful.
So let's tie this all together. If you had to give the 1-minute summary of Pentair today, what is it?
It's a company playing a brilliant game of both offense and defense at the same time.
Okay, break that down.
The defense is the cost control, the 80-20 rule, the pricing power. They're defending their margins against tariffs and inflation.
Protecting the fortress.
And the offense is the innovation, the PFAS filters, the smart pumps, and that massive cash flow they're using to buy back shares. They are not waiting for the economy to get better.
They're making their own economy.
I think that's a perfect way to put it.
All right, I want to leave everyone listening with one last thought to chew on.
Okay.
We've established that their entire 2026 plan is built on the assumption that the residential pool market goes nowhere. It's priced for a no-recovery world.
Right, the pragmatic guide.
So the question is, what happens if they're wrong? What if interest rates actually dip late this year or in 2027 and all that pent-up housing demand finally breaks loose?
Well, that is the multi-billion-dollar question, isn't it?
What happens?
You'd have a company that's already hitting record profits in a flat market. If you suddenly add real volume growth on top of that super lean cost structure, I mean, the earnings power could be absolutely explosive.
It's like a coiled spring. The market might see this boring water company.
But underneath, there's this leveraged growth engine just waiting for a spark. So is the market underestimating the upside here? That's what I'll be watching.
A great question to end on. And a reminder, this deep dive was based on Pentair's Q4 2025 earnings report from this morning, February 3rd, 2026.
The landscape can change quickly.
Thanks for listening. Go have a glass of water.
And maybe check your filters.